Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the Bollinger W. Today, we're going to do some 5-minute trading strategies based on the Bollinger W. We actually put out an instructional video. I'm going to go over that. Secondary, we're watching two different markets for an opportunity to maybe pick a bottom here, an intraday bottom. One of them's gold, one of them's silver. I think we got a pretty good shot on that. We also had one that developed in crude oil futures during the overnight. It was a fantastic Bollinger W trade. I'm going to show you that. And these are going to be 5-minute trades. So We're going to go through exactly how you pick a market to trade this strategy on. We're going to go through the rules, and then we're going to execute a few of them. And I can already see that this is a target-rich environment for the W. We're looking to pick intraday double bottoms, 5-minute chart. We're rocking. We got a lot of negative. We got a lot of negative on the tote board. That means that we're going to have an opportunity to trade this thing. So looking forward to that. We've also got to look at our economic calendar. And lastly, the story of the day is going to be Tesla. So let's go ahead and get out to this is the big one, guys. This is the one that if you're trading stocks today, focus on Tesla. This is going to be an interesting, fascinating type of an event. I have to choose my words carefully, because right now there's a lot of heat on Elon Musk. There's a lot of heat on Tesla, and it all has to do with our election season. A lot of selling lately. I'm going to show you the daily chart here in a second, but this is it. This is the Q3 earnings call. We've got Tesla down about 0.25%. I don't know that anybody's going to really sell this thing off, specifically with what we think is going to be a solid earnings call. But we just got to look and take a look and wait and see. Mark Corp, good to see you. Let's get out to price action here. This is a good look at your Tesla chart. Now, I want to cover this first because this is one of those. This is a long-term strategy right here. Now, it's a 5,200 crossover daily chart. This is like, I would say, in the dictionary underneath stock trading. If you're trading stocks, are you trading the 5,200? Personally, I don't buy in really to too many of the crossover things. We've been doing some short-term crossover stuff, but the idea behind a crossover strategy is just to get you positioned and get you into the market, either to the long or to the short. Now, you can certainly use confirmation tools. Most traders don't. 5,200, especially on a daily, you'd see right back here, you had sort of a crossover. That 50, you'd have been long there. And then as we crossed under, you to close your position out. And then probably either been short if you had naked shorting opportunities. You could have definitely shorted or maybe taken an options play. A lot of traders do that. They buy puts when you get this situation here. But what we need to be looking at right now is the most current crossover. Now, back on, back on the 12th of July, we had a crossover there. The 50 crosses over the 200. Always remember, the fast moving average, when it crosses the slow moving average, that's your signal to get in and get out of the market. That's key. That's absolutely key. So you're going to want to make sure that you understand that. But as far as what we're still working along here. You crossed here, you bought, and theoretically you're going to stay in this until we cross back under that 200. So there's a lot of folks that are long right now. Now, if you do take a good look at this daily chart, I wouldn't qualify this as a gap just because we haven't gone about 60 or 90 days. Personally, for me, the longer the gap, the better. Remember, there's a couple of rules in trading. Gaps get filled in, gaps get filled in, and gaps get filled in. Well, right there, that's a gap, but I don't consider it a gap because you just traded it last month and you traded it extensively right around that 225 area. I'm sort of looking for a pop today, though, and it really does depend on your earnings. So later on, this afternoon, when Tesla earnings, the Q3 earnings call takes place, you're going to get some serious action out of this stock. For me, I would say we're butting up against that 200. You can see that that's a big-time support zone. If you were going to go long going into this thing, that probably is a pretty good place to go long. Why? You've got the crossover there. You've got the 200 as support, and you've also got sort of an area. A lot of people would call that a fair value gap. I just call it a gap, but for me, it's not a sweet gap. Sweet gaps are 60 to 90 days. Then we unload and really look for price to gravitate back up there. We're not really going to get that today, but maybe 225-ish. If you want to have a day trade, maybe buy in at 216, buy that 200 moving average, and then look maybe to get that reversion back up to 225. All right, that's enough about Tesla. Let's talk gold. Everybody wants to talk gold today, and I do too. We really were beating, I don't know that we beat a dead horse here, but we definitely have been talking a lot of gold. And right now, the whole world's talking gold. We were contacted, the coaches team here, we were contacted by Business Insider. They wanted opinions on gold. Everybody wants to know about gold. You guys pretty much know where I stand on gold right now. It looks like I'm going to miss my trade, and it's going to really frustrate me, but that's life. We're going to go right here to gold futures, and I'm going to show you where I'm looking to buy. This right here was my range number 1. Don't ask me what the range numbers are. That's secret sauce. But right there, that range number, that was absolutely fantastic. And range number 2 for me is right there, a beautiful thing. That's more than likely going to yield some real nice money, and we're going to miss it. But that's okay. I'd much rather live stream with you guys. But seriously, that's probably a $1,000 trade right there. Ooh, that bothers me. I'm going to have to automate. In any case, 27.42.3. I'm looking to bid right there. Maybe take anywhere from 25 to 30 30 ticks on it. I think you're going to get a quick hitter. One thing that I would be very careful with, though, is if you are thinking of going long, don't do it right now. You've got that intraday low right there. You can see you got the nice spike low, compression, and now we break. As soon as we break, it's impossible to know how far that we go down the queue here. So be very, very careful if, in fact, you're holding longs right now with gold, because the intraday trend is down. Going back to spot gold, this was an area that we really wanted to hit. And last night it was pretty good. I was posting things on X, and you can see right up in here, we went up there during that aftermarket, and then we sold off big. We had a nice big sell-off down there to about 38. Remember, 45 was our entry. Now, that was a $7 gain. Now, if we go back to our trade idea that I sort of want to unpack here, is that what we were shooting for? And the answer is no, it wasn't. We're looking for 24 here. So I've been asked, or 25, 27, 25. I think we're going to get it, to be brutally honest with you. But look at what happened here at this key level. This happens at key levels all the time. Areas of natural resistance or support, there's always a fight. Now, we knew there was going to be a war at 27.50. We knew it. The problem is you don't know what price action and how exactly it's going to behave. So I had a lot of folks during yesterday's live stream that were selling 46s, and they were happy. They made a little bit of money, and the price sort of went back up against them, and they started taking draws. And that's where you've got to decide for yourself, what am I going to do? How am I going to execute this trade? What am I looking for? Now, for me, if it goes $7 in my favor, it's a lot of money. It's a lot of money. Do I want to A, take profits, B, leave the trade as it is, or C, move my stop loss to break even? Now, if you took the money, great. That's a nice trade. If you moved to break even, no harm, no foul. You didn't have to go along for this ride. But the real question was, did we have an opportunity maybe to get short again after we got the big rally above that 27.50 area? That was a real hard one to hold on to. If you were holding shorts there and you went all the way to 58, likely you got into trouble. You either ripped the Band-Aid off and took the loss, which, we couldn't have blamed you right there, especially after we took out that swing high. But was it the right thing to do? If you were going to go for a position trade looking for about $20, you probably are going to have to risk some significant money on the other side of 50. It's hard for me to really tell you where to put your stop loss after the fact. Sounds like I'm making up a story, but usually I go 1-to-1s. Even a 1-to-2, you're only risking, $10 there, something like that. That was a tough trade, guys. Now, was there a way that we could have got this thing from the short 27.50 and made it a little bit better? Yep. Take a look at our 4-hour chart. 4-hour confirmation. I love hammers. That's an inverted hammer. Some call it a hanging man. Take a look at that. That's a beautiful thing on a 4-hour chart right there. Bang. Washed out 50. Washed out all the retail shorts. What do you think happens? We just made a video, Beat the Market Makers. What do you think happened right there? Washed out all the shorts, all the retail shorts. People like us that were right. We knew that level was going to be big. We knew it. What happens? You get washed out, bang, there's your hammer, there's the sellers. The institutions are involved now. I think we're going lower, at least in the short term. Now, I got this question in the live chat earlier. Shane, what dip would I buy? It's easy for me, guys. My weapon of choice is the Fibonacci retracements, and I would go right there. Spike low, beautiful spike low back on the 15th of October, and we roll right up to today's high. And if I get a chance to bid 27.12s, we're there. We're there with bells on. Look at what you got here on the daily. You got a great Fibonacci level. We've got a trending market, and you've also got sort of an order block where that hammer is. Now, notice the difference between that hammer and our 4-hour hammer we just looked at. This hammer doesn't get elected. So like if I was trading this 4-hour hammer, the first thing I've got to do is I've got to make sure that we trade beneath that unless I'm not interested in it. So I don't just see the hammer and then sell it. I'm selling beneath that hammer. That's the idea, that we get in on a valid swing high to the short, and I think we nailed that one. But again, these things develop in real time, and it developed while I was sleeping, so probably wasn't able to point that out till after the fact. Don't hold it against me. I got to sleep sometimes, guys. I got to sleep sometimes. In any case, I'm watching right now relatively closely, 27.1290. That's the bid. That's the bid. I would expect this market to fall away at least to 25. It looks to me like that's going to happen. We're at 35 now printing. That red line right there is 25, and that would be our profit target. We'll see if we hit it. Sort of a challenge. Gold futures are holding on. If I get a chance to bid those 27.43s, we're doing it. We're doing it. So that's a quick look at the trade follow-ups. As far as where else we're at today, what I want to focus on is a strategy, 5-minute strategy session. We're going to make some trades. We're going to get in there and see if we can execute. And that gold market's falling away, 27.33, and we're pushing lows. 30-minute structure is going to be broken here in a second. We're going lower. We're going a lot lower. Yeah, there goes my gold futures trade. It's going to go here in a second. So, that's life. Can't win them all, guys. Just need to win some of them. Remember, it's more about what we don't lose. It's not really about what we make. And if we have an opportunity to trade, we need to trade. But the biggest thing to remember is there's a lot of opportunities in these markets. Don't beat yourself up if you miss one. Easier said than done, though. I'm already frustrated. Let's have a look. This is what I want right here. Let's go to our 1 minute chart. I mean, right there, that would be it. 27.42.7. Where do I want my order right here? Go ahead and send too long. 27.42.8. Shaded a pip. Let's see what happens here. Right here would be the trade. 1 minute chart. See that overextension? See the volume? This is a good look at what we're talking about. Nice volume, nice sweep lower. Right now, we're looking to get long right down there. I would love to see this go right now. This isn't bad market structure at all for us. We're going to let this thing bleed a little bit, but that's about it. I mean, we should be doing this live on my live account, but oh well. It's early here. We're still going in a few different directions. Interesting area, though. Interesting area right there. What was our low? Our low was 27.47.7. I'm looking to go, or excuse me, 27.43.2, and I'm looking to go right down there at 42.8. It's a game inches when you're scalping. Missed a great trade yesterday, at least the first time through. Similar range number. We showed you that live as well. I'm going to be watching this, but we got other fish to fry here unless we get it right now. Yeah, we could be waiting on this thing all day. Pretty good support right there, though. And the idea would be just to get in, looking for 10 to 20 ticks, probably taking one contract off at 10, letting the other one run for 20, maybe 30. It could be a pretty good trade. And if it gets swept out, we just bail. It's that simple. You end up taking a loss down here somewhere. Probably going to need to let this thing sit for at least a minute before we get the rotation back up to where we want it. And this type of formation right here, I don't like at all. That's life. That's the way it is. So that's trading, guys. They pay us to wait. They don't pay us to trade. And we'll see exactly what happens here when this thing unfolds. Okay, Bollinger W strategy. This is one that's sort of modified from John Bollinger. He's sort of the founder of the feast for me. All right, right there's our trade. We're taking a little bit of heat right there. Taking a little bit of heat down to 41. You got to let these things sit for a minute. Should be a pretty good level. Let's see what happens. Printing 41.6, somewhere in there. We're in the hole about, 10 ticks right here. We're looking to get a little bit of a reflex. We're looking to get a little bit of a bounce up here into positive territory. If not, we got to get out. We're down about 260, 300. And this isn't the best trade in the world, but I think we're going to be all right. Right there, we're looking for, this thing's got to sit for a minute. Okay, there's our bidders. Our bidders are stepping in. Okay, now we wash the bottom. Let's give it just a little bit more time. Right there, 27.46. Right there, there's our hammer formation starting to set up. We're underwater, though. We've got to get a bounce off of this thing relatively soon, or we got to scratch it. Right there, 480, 500, 480, 500, 460. Just got to be a little bit patient right here. A little bit patient and see how this sets up. What I'm looking for is I want that hammer, that 1 minute hammer formation. That'll tell me that the selling is over and that we're ready to bid this thing back up into the 45 area. But we are fighting a significant trend. We're on the back end of that breakout that washed out intraday lows. And right here, we're going to let this thing sit for another 20 seconds, see exactly where we end up. The pressure's on, though. Look at the volumes. The volumes are high. The sellers are coming into the market, and they're doing it with reckless abandon. But right here, wherever there's sellers, there's bound to be some buyers, especially in this gold market. Great trade right up here. We're sort of going along for the ride here. I don't really like it that much because we are in negative territory, but we are going to have a firm out here in 1-2 seconds. Okay, right there, if we break beneath that bottom, I'm out. It's not a perfect hammer. But it's not a bad one. Okay, right here, we're back up. We're going to be right at break even here in just a second. We need a rush of bidding. Now, a couple of things, guys, if you're looking at tick scalping. Number one, you can see this right here, heavy volume. Number two, our volume has definitely dried up. What we're looking for is some bids to hit, but the sellers have to leave. If the sellers don't leave, we got to get out. We had a chance right there probably to get out at darn near break even, but I'm already in this trade. I've taken the risk. We've got to get paid for it. We've got to get paid for our trouble. Right here, we're getting the bounce right up to 27.41. This one's tough, guys. It looks like we're going to get swept out of here, and as soon as we take out that spike low on this 1 minute, then I'm gone. I don't want anything else to do with it. We rip the Band-Aid off, we take the loss, and it looks like we're going home a loser. So that's going to be the way that this works, especially when you're fighting trends. If the bidders don't step up and save you, you got to get out, and right there, bang, we're out. So took a hit right there. Pretty good fight, though. We got right back up to break even. this market could be going much, much lower, and it looks to me like we're at 27, 26 on that spot market. And yeah, right there's your bidders. So it is what it is, guys. You got to make sure that potentially you avoid that as much as possible. But when you're fighting a trend and you don't have confirmation, that's the way it is. You step up, you trade it, you rip the Band-Aid off, and you move on. Right there, pretty good bounce back to break even. It looks like we may be right on that trade idea. We just got to wait and see. In any case, Bollinger W, we're getting to it. We've got an opportunity here potentially to see a setup happen in gold. That's why we're looking at gold relatively aggressively here, because that's moving. And when it moves, that's what you want to trade. Now remember, we're trading demo dollars here. So if you lost $500 on that trade, you need to make sure that's 1 to 3% of your account. It's very, very important that you understand that it's not, you can't be flushing 30 or 40% of your account on one trade. You can't be doing it. And right now we're starting to see gold rebound. And we may be in position to get this Bollinger W trade. I'm hoping so. All right, in any case, strategies inside of our trading academy. You just go right over to Bollinger W. It's a video that I prepared. It's relatively straightforward, about 6 minutes long. Remember, click on learning resources, and you're going to get all the PDFs, everything that you need really to get in there and trade the Bollinger W and understand everything about it. So if I'm moving too fast for you, that's okay. We need to be moving fast this time of day. It's very important that we're on our toes. But right now, the Bollinger W is setting up in any market that is bearish. Now, why would that be? Because essentially it's a double bottom formation, something like this, okay, something like that. What are we looking for? We've got our Bollinger Band settings or default settings. That's going to be the Bollinger periodicities at 20. You're using an SMA on the close. That's going to be your Bollinger Band. Your first low, you're looking for a downtrend or a downward move, downward pressure in price. Your first low right there is going to be outside of the bands, the Bollinger Bands. Your pullback, you're looking for a pullback there. That's center part of the W. And then the second low is going to be inside of the lower Bollinger Band. Then we're looking to go long on the first big green bar. Now, it's important that you got to have a big green bar. You can't dive into these things. If you miss on that read, you're probably going to lose. So I'm going to show you why here in a second. I'm going to draw you one here on WTI crude oil that developed during the overnight. So right there, that's a good looking schematic. Now you can see this is how you'd execute the trade. Right there's your bearish move. There's your first low outside of the lower Bollinger Band. There's your pullback. There's your second low. It's inside of the lower Bollinger Band. And what do you have? You have a large bullish candle right there. Now remember, a large bullish candle is going to have that body. It's going to have that big body. That's what we're looking for. I'm not interested in wicks. I'm not looking for hammers here. I'm not looking for dojis. I'm looking for big bullish candles. That body's got to be big. So something like this right here. Right there, bang. Now, why would I say that's a big candle? Look at the size of the big green body. It's at least the size of the one before it, and typically needs to be a little bigger. To me, that's large. Now, that one right there, that's not large. That's not large. That wouldn't be considered large. Not even that's considered large. It's got to be obvious. The number one thing about pattern is it has to be obvious. All right. In any case, this is what a successful one would look like. You can see we've got our first low here, our pullback, our second low, and then we buy right there. And you can see we just go right up and hit our profit target. All right. Here's a real life example of what we saw during the U.S. During that overnight session here in WTI crude oil. This is a 5-minute chart. All right. WTI crude. We started right here. Now, a couple of things. You've got to start your session at some point. All right. Now, I drew this up. I wouldn't be trading crude oil during the overnight, unless I had a position on or something like that. So I'm sort of on the fence. Is like, do I use this as an example? But it's a pretty good example because it shows us three things. Number one, you've got your bearish move. Now, I like it much better when the entirety of the move is outside of that lower Bollinger Band, and then we get that pullback. So right there, you've got your first low outside of that lower Bollinger Band. There's your pullback peak. Then you've got really down to your second low, which is going to be right here. So the first question that I guarantee I'm going to get is, Shane, why wouldn't you be looking to go, or excuse me, why wouldn't this be sort of the end right there? Why wouldn't that be your second low? The answer, it is a valid pullback. We came down. That second low is inside of the lower Bollinger Band. You don't get a big green candle. The big green candle, the big bullish candle is what confirms that this double bottom may be valid. That's absolutely important that we understand that. So when you've got this sell-off right here, that's an obvious first low right there. That's an obvious pullback. Now the question becomes, okay, where can I get in? Right there, there's your second low. You're looking to get in, but you get a doji. and then you get an inverted hammer. You're not taking that trade. You can't take that trade. So you're still riding this thing saying, well, can I get another low? And there it is. There it is right there. Nice big negative candle. Nice big bullish candle. You're buying right there. You're buying right there. Now, it's easy to say, okay, well, you cherry picked this. You went back. Yeah, well, yeah, it's a good example. It's a good example. We're going to do this live right now, though. Right there, bam, sell off, pull back, big green candle, and we're off to the races long. So definitely something to think about there if you're trading this Bollinger W strategy. That's what it looks like. Now, if you're right, boom, you usually pick a bottom, a pretty good one. Now, the other thing I would say is remember the location of this first bottom, the second bottom can be lower than your first bottom. It just has to be inside of that lower Bollinger Band. That's the qualifier. You don't need any other indicators for this. You can combine an RSI if you want, if you feel better about it. You don't need any other indicators, though. And that's very, very important that you understand that. So right there, there's your long, bang. That was a big-time winner. All right, let's go see if we can find one that's setting up. Let's go back to our gold market here. This is interesting right here. Do we have a potential Bollinger W? Yeah, we do. We're trending. We're coming off right there. We've got an opportunity potentially to get a first bottom here and then a pullback and then a second bottom. So odds are you're going to have to wait probably the next 25 minutes or so. But this would be a day on gold where I would be looking for that bottom. I really would be. So be very, very careful trying to hold along unless you've got a reason to do it. You saw how high risk that was just playing a naked range number this time of day. High risk trade. But this type of trade, let's say we get this W to set up later today on this gold chart. I would be looking at it. I will be looking at it. As far as silver goes, you can see silver right here has just sort of been in a train wreck type of a situation today, really giving back a ton of gains, giving back all of yesterday's gains. But look at what you have here. Really, since we started, you've got something like this. There's your first low. There's your pullback. If we get something to stall out right in here and then the big green candle, we're in business. Unfortunately, we don't have that yet, so you have to reset your count right now. There was your first low. Your second low is going to be beneath that lower Bollinger Band, but look at that. You've got another first low. So wait for this to creep up and then come down, and that's going to be your bid. It's going to develop for later today, more than likely. I would be shocked if the metals don't see a buyback today. I really would be. All right, let's go let's get down to business here with some falling equities markets. Who's got the worst damage here? We've been really focusing on the NASDAQ because it's an active market, and it's one that most people really a lot of day traders love to trade just because it's so crazy. But right there, so there's your first low. So the question is do you get that pullback second low? Nope. Second low is outside of the lower Bollinger Band, but you've got a new first low. So if you get a pullback and then down, then you could be looking to maybe buy this one later in the day. 5-minute chart. Is a 5-minute chart risky potentially? Let's go to the YM. What do you got here? This would be a pretty interesting question. Right there, there's your open, there's your sell-off, right there's your first low, okay? So if you're looking for your first low, something like that. Second low, there's your pullback, second low, potentially a bid. Now, when you follow the Bollinger W, there's no hard, fast rules saying that you can't go above that middle Bollinger Band, the upper Bollinger Band and then come back down. I don't like to do that. I like to see price sort of stall out right in the center somewhere, maybe just a little bit above that midpoint. So I would probably disqualify that, but here's one way you could trade it and how a lot of traders would. Maybe a trend line, something like that. You could even adjust your trend lines if you wanted. Essentially, that's what your Bollinger W is. Certain formations are trend lines. So we got to watch this relatively closely. But for me, that would have disqualified that. I'd say, boy, I've already missed this huge move. But then again, if we come down here and base, let's say we base out here and then you get that big green candle, that could be a pretty good signal that the bottom's in and there's good profit target or profitability possibilities to the top. So I'd be watching that relatively closely. This is an interesting market as well. Let's see if we can find a Forex pair to stretch our legs on here. What's down today? All right, Aussie USD. This is an interesting one. Once again, we didn't get the setup. You can see right there would have been your outside the lower Bollinger Band. Then we went down, down, down. You can see you're sort of touching that line. I mean, you could theoretically say that that's your second bottom, but you don't get that nice pronounced pullback. Remember, it's got to be a W, and I would just say, this is just a trend and then a fish hook and a turn. You'd be better off trying to trade this thing if maybe that bottom would have been inside the lower Bollinger Band. So definitely something going on here, but I'm not really too blown away with it. I think that's probably you're gonna have to scrap that one as well. Let's see what else we got. Bitcoin here. Bitcoin on a W. Do we have a W? Yeah, this would have been a losing W here. 5-minute Bitcoin. We would have went right here. There's your sell-off. There's going to be your first low. There's sort of your pullback. Bang. That's going to be your second low. I would consider that a big green candle right there. So you could have bid this thing and made a little bit of money and then got stopped out eventually. So the real question about this, and this is a good illustration of a losing strategy, so I can show you exactly where your stop loss would be. You have two options. I believe in options. Number one, you could put it beneath the pattern itself, which would be right down in here. Or number two, you could put it beneath that second low. If I was going to trade beneath the second low, something like that, I would be looking to dial in a very, very tight risk versus reward. Why? Because we're playing very, very tight. We're making this thing as cheap as we possibly can. I would be looking probably for a 1-to-1 playing that tight. Now, if in fact you're going to let this thing bleed against you and go against the entirety of the trend beneath that first low, then you're probably going to want to be long just to wait and give this thing a chance. I mean, this has got to, if you're going to risk that much, you got to be looking at a 1-to-1, 1-to-2, probably maybe a 1-to-3, trying to pick that bottom, because this type of a loss is significant, because right there was your entry. There it is, and then you get the pretty good bullish move. And then we come down and wipe us out. So not necessarily the best type of scenario there for the W. But if, in fact, you were up in here with your stop loss, and let's say you just aimed for the top of market structure there, you might have taken some money off the table. So something to think about there. There is definitely some, I would say, some execution options for you. It's all covered in the video, and it's covered in the learning resources. So be sure to check it out. Let's see. What else do we have here? What else is off big today? So Euro USD off? That's not really big. Well, I mean, here you go. I mean, there it is. Sell off, pullback, sell off, second low, big green candle. There's your position. Not a bad trade. Not a bad trade at all. Take a look at it. There's your sell off, first low, pullback, second low, big green candle, boom, you're off to the races. So you're looking to bid right there at 107.70, and you're up about, 9 pips. At one point you were up 12 pips, but you're locked in for a pretty good position. So definitely something to think about there. If you're trading 5-minute charts on, say, a Forex, I'm not the biggest fan of that, but if you're going to do it, you do it right now when you've got that London-New York overlap. That's absolutely huge. And then your daily, do you have anything maybe setting up here? Yeah, we were close here. We just don't. There's the downtrend. How about a 4-hour chart? Is there any bottom in sight? Nope, not yet. If you're trading this on a 4-hour, which I would be much more comfortable with, you'd be looking at your first bottom right there. Bang. You're looking for a pullback, second bottom, and then a go. So you're probably watching this for the next 24 hours probably, looking to swing trade this type of trade. What else do we got here? Anything else deep into the red we could look at? Let's go back to our gold, see if how gold's doing. Nope, we just keep trending lower. 24. Well, we definitely got that one right there. There was our trade. Sold off a little bit, came back to break even, never went positive. This thing's creeping down. My next bidding area is a pretty good one down there at 27.5. That's 38%. Like your gold, spot gold. And if you were in fact taking this short from 27.50, there it is. What's today's low? Today's low is 27.23. So the trade idea came in. It would have been very difficult to execute that, though. Very difficult. So you definitely want to be careful doing this stuff, especially you just don't know what's going to happen around big round numbers. You just don't know. But right there, there's your bid, 27.12. If we get a chance there, I think that's the one. I think that's the one today. We just got to wait and see right there. 27.12ish. All right, guys. That's sort of the way it is trading, doing these strategy sessions. A lot of times we get trades. A lot of times we don't get trades, but it looks to me like that's going to set up. What else do we have here? US 500. Can we maybe get something there? You got a first low and then a pullback. So now you're looking for a second low and then a bid. Potentially. The other thing that I would remember is keep an eye on your economic calendar. I mean, that's absolutely huge. So if you're interested in trading something like the W and you set your trade up, make sure that your economic calendar doesn't get in the way. You got to make sure that there's no big market mover coming out. Like the BOC already made their policy decision or whatnot. I believe they did. They should have. In any case, you got to make sure there's no big market movers to wreck what you're trying to do. And then right there, crude oil stocks change. That's going to be out here in a minute. I believe it just dropped, actually. There it is. 5-minute chart. So bang. Bearish action, though, on WTI crude off of this. I've got a moving average and a Bollinger midpoint there. Interesting, though. Interesting stuff here. Nice big sell-off. Nice, a lot of volume. Huge amount of volume on that. Curious what the number is, really. Let me find it. Trying to find it real quick. 5.474 million. So you got a big time supply build in WTI crude. So that supply build brought the sellers to the market. The real question is can they keep this market down for the rest of the day? Remember, crude oil stocks, when those come across the board, be ready for anything, because a lot of times that initial reaction doesn't hold the rest of the day. That's pretty much what we're talking about. All right, everybody, that's about enough for me. Fascinating. Gold's something. I mean, if you're trading anything, you're probably trading gold today. I think that's probably where the game is. As far as what WTI could do later today, I would just be out of it. I really would be. It's too tough to try to figure out what they're going to do after the inventories. Definitely be watching the bearish side of the market, though. With a big build like that, typically that means that crude oil is going to come down. And also Tesla, Q3 Tesla. If I'm looking for W's on a 5 or a 30-minute chart, if I'm looking for W's, I'm looking at gold and I'm looking at silver. I want to buy both of those on a pullback. My key levels, if I could get a W around my key level, that would be absolutely huge. But I'm looking to buy metals on the pullback today. Now, as far as equities go, equities are coming off significantly. I would be waiting until later in the day to maybe play a W on those. So something to think about there. All right, everybody, I'm going to go ahead and sign off. Kirkton, Shane Vernier, can you have a look at the German 40? Yeah. All right. I don't usually trade those, but we can do it. Actually, we don't want that crossover stuff. Let's go right here. You're welcome, Mark Corp. Yeah, absolutely, Dibble. So if I'm looking at the German 30 daily chart, German 40 daily, first thing that jumps off the page at me is a trend line. Remember, a trend line's 2 or more points. Bang, bang, bang. Okay. If in fact you do trade beneath that, could be pretty good. A lot of folks would argue, say, Shane, you could connect it there too. And I'd say, not really. See that center one? I'd be looking to connect to today's low. That's interesting. Then you can go to a weekly chart and try to get some convergence. Something like this. %, still bullish. Even though you've got a negative week today, you're still bullish right around 19,385. So maybe that would be your bid, but that one's already gone. If in fact you do see a bigger sell-off this week, you could be looking down there at 19,202, something like that. Absolutely, JC. So that's essentially, that would be what I would be saying there, Kirkton. You got to really look at, respect the trend. Definitely respect the trend. If you want to scratch all that stuff and just sort of put this thing up, something like this, is how I would approach it. Clearly, you're bullish. No question about it. I'd be looking to buy pullbacks. This order zone right here, though, this right here, right in your golden zone, take a look at all those bids. If you're going to take a position, you'd much rather do it from down there. But like a scalp trade, 18,672 could be pretty good. Could be pretty good. Gold still, basing out around 27. All right, I'm going to go do some trading. You guys have a fantastic day. We'll catch you tomorrow. Trade the action well, and we'll talk soon. See ya.